In this video, I will show you how, by using the power of multi-timeframe technical analysis and order flow, you will be able to find the best swing trading opportunities in the market. So we will be taking a pair, analyzing it both from a technical and order flow perspective, and by using the combinations of these two different approaches that you can have to the market. By the end of the video, I will show you exactly where you can be looking for a potential trading setup on the actual pair that we are analyzing in the market. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe, and I will see you in the video. In today's video, what I want to do is speak about three pairs, okay? Two of them are exotic pairs, and if you have a good broker, okay, with tight spreads, you are simply missing out on a lot of profit potential by not trading exotic pairs. Trade exotic pairs because they have great moves as the major and crosses, okay? There is no reason for not trading them. The only reason would be if you have very big spreads, but if you have a good broker, you have good spreads, okay? So there is absolutely no reason for not trading them. Simply, if you're not trading them, it means that you are missing out on a lot of setups. So two of them are exotic pairs, and I want to give you an update on the situation that we currently have on USOIL from yesterday's analysis. So let's start by CHF SGD. Now, CHF SGD at the moment is providing the opportunity also next week for a beautiful capitalizing opportunity. Now let's first give a full breakdown of the pair. Now from a monthly perspective, what do we have? We have a pair that clearly created a nice impulse, nice correction, and we want to see the continuation to the upside for the creation of a higher high. So you have an impulse, a correction. If you want to measure the correction, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse. And what you can see that clearly the market retraced exactly to the 0.382 Fibonacci retracement, which is exactly where you would like to see the market make a retracement to if the market is in a strong trend. And in this case, definitely the market is in a strong trend. You have a very strong impulse, you want to see the retracement and the continuation to the upside. If we go down on the weekly time frame, what do we see? Now on the weekly time frame, situation is extremely interesting because what do we have? We have a market that after creating this retracement started a new move to the upside and just now created the candle that the next one is supposed to fill in the wick. We spoke about this pattern many times. If you have a market that on the weekly has a candle like this one, okay, which by the way is exactly the same as the one that we had here, you want to see the next candles fill in that wick, because the wick simply it shows you that there has been a retracement on lower time frames. So you want to see the next weekly candle make a move to the upside. And in fact, if we go down on the daily, what we can see? We can see that from a daily perspective, that makes perfect sense because the market just started a retracement after hitting our profit target. In fact, if you remember, we were running along with students on CHF SGD from the first analysis that we made on the pair, giving us a beautiful 1 to 3 risk to reward to the upside trade with a beautiful take profit that the market just hit for us this week, giving us a nice return on the trade. And after hitting our profit target, which by the way, if you're asking yourself why our take profit was exactly there, very simple. From a daily perspective, follow the pattern. We had the W formation. After a W formation, what do you want to see? You want to see the market make a retracement to the neckline, which is exactly what the market did, retracement to the neckline. And then what you want to see? You want to see the continuation to the upside for the creation of a higher high. And in fact, that is exactly what the market did and the move on which we actually capitalized. And the take profit, very simple, Fibonacci on the retracement. And the take profit is just below the minus 27 of the Fibonacci taken on the actual retracement. So after hitting our take profit, the market started a nice retracement, and currently the market is testing a very strong structure area. In fact, this level here is very strong structure support. Why structure support? Because it was acting as very strong resistance here, resistance here, resistance here, resistance here, resistance here, again resistance, and now all this level is turned support here. Specifically, what we can see that in all of the impulse to the upside on which we actually capitalized, there is one candle which is not related to the move, which is exactly this candle here. Okay, this red candle here, which is a very strong demand area for this market. So we want to see the market hit this demand and take a rejection from the area. Now, if we go and see what we have from a COT perspective on it, so commitment of traders, what the biggest banks and institutions are currently doing on the CHF. What we can see now, let's take our commitment of trade, our custom app for the transparent effects commitment of traders. It's a TradingView plugin, and we also have a desktop app. What we can see, if we check the CHF, what we can see is that we went from 8K net positions all the way down to 1K, and now again, we can see that with the last report that just came out yesterday, hedge funds opened another 1K long positions and closed 1.8K short positions. So they closed almost 2K shorts and opened 1K longs, bringing the long positions at 12.7K and the short positions at 8K. So definitely we can expect some CHF strength. Now, this means that we can expect the CHF SGD to complete this impulse correction and impulse pattern to the upside. So how we will be approaching this pair? We will be monitoring price action on the 4-hour time frame inside of this support area, waiting for the market to provide to us one of our valid entries with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the continuation to the upside and creation of a higher high. Now, the other pair that I want to speak about is USD/ZAR. Just a quick reminder, make sure you comment below and you let me know which topic or pair you would like me to cover or analyze in the next video. Now, what kind of situation do we currently have on a USD/ZAR? Sorry, actually I meant Euro/ZAR. Because on a USD/ZAR, we are currently running with students a nice short, which is already risk-free, but the next opportunity is not that near. However, on Euro/ZAR, the next opportunity is quite near. We just closed our trade a few pips above our take profit just before the end of the week to take our 1 to 3 risk to reward on the pair and just close it without the need to holding the position over the weekend. But the next opportunity is very near for Euro/ZAR, so that is why I want to speak about the pair. So let's make a full breakdown on it. Now, starting from the monthly time frame, what do we have? Now, on the monthly, we have a very strong impulse in the market. We would like to see the market make a retracement to which level? Exactly to the previous resistance here, which is now turned support at this level. Now, if we want informations on this retracement after the impulse, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse, and you can see that you have a 50% retracement, which is lining up perfectly with the previous resistance, which is now turned support at this area. So you definitely have a very nice downside target for this pair. Going down on the weekly, we have absolutely everything bearish. The market is currently rejecting this very strong supply area that this green candle created, and the market is now making its move to the downside after breaking back below it with this candle and retesting it and rejecting it with this candle, creating on lower time frames, aka the daily time frame, a very nice impulse correction and impulse pattern to the downside with a nice bearish W formation, on which we basically actually capitalized, which was the actual trade that we currently closed for a beautiful risk to reward to the downside and a good capitalizing opportunity. Now, How we will be approaching the situation here on Euro ZAR. After the market will have completed this last impulse to the downside from this support area, we definitely expect the market to give us a retracement, so to react to the area. And at that point, what we will have a market that most probably will go back up to test this resistance here, because always remember, in the market, previous support is turned resistance. So we will have here a level of previous support, which is turned resistance here. And we will also have the confluence of the Fibonacci taken on the daily impulse. So from the high to the low, possibly at 0.382 and 50% retracement resistance zone inside of this previous support, now turned resistance, and creating basically a confluence of resistance inside of this area from which we expect the market to show us a move to the downside. We will also have this bearish trend line, basically everything combining inside of this resistance area. And what we will be doing. First, let's go and see what we have from a COT perspective. So commitment of traders, what the biggest banks and institutions are doing in the market. If we check, we can see that with the last report on the euro, we went from 118k net positions down to 98k net positions. In fact, hedge funds basically added another 9k shorts and closed 10k longs, which is a massive shift. And basically in the short term, we can expect some euro weakness. And if we go and see what we have from a ZAR perspective, we can see that it's getting stronger and stronger and stronger. We were sitting at minus 1k net, 1.9k net positions with more shorts than longs, with 4.7k shorts and 2.7k longs. And now we're sitting at 6.6k net positions. So 9k longs and 2k shorts. So way more longs than shorts. So basically we can expect ZAR strength, which means Euro ZAR to the downside. So again, we will be monitoring price action on the 4-hour time frame inside of this area, because always remember, monthly, weekly and daily is for direction. The best time frame for entry is the 4 hours. So we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside. And the last pair that I wanted to speak about is US oil, which, as you know, we spoke about yesterday. However, at the moment, the market created this huge rejection to the upside. This is not a retracement, okay? This is a rejection, which is way too strong. And also from let me delete all the chart, okay, because I don't really want to give you a full breakdown of it. I just want to show you basically the situation. Now you can go and check the previous video, is literally the video from yesterday about it. We made a full breakdown on it. You can go and check it out. But at the moment, look at what happened. The market didn't retrace. The market just exploded to the upside with a huge rejection. So as we are speaking right now, when the market will open on Monday, there is absolutely no opportunity to be looking for any shorts, because the market just broke all structure. During this move to the downside, the market created one green candle, which is this green candle here. And this is a strong structure area, which the market currently broken to the upside. Until the market will remain above this area, and until it will continue to create bullish structure, there is absolutely no opportunity to be looking for any shorting on US oil. So we definitely cannot be looking at the pair for any potential opportunity, at the instrument for any potential opportunity at the moment, but I will try to keep you guys updated if things will change from a 4-hour perspective. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, I give you a new daily market breakdown showing you exactly how to apply these strategies with the entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, or you can go and check out the next video.